Good morning, Richard Calhoun, Creekside Realty, here to discuss the Bay Area, San Mateo County, Santa Clara County, Alameda County, Contra Costa, single-family homes, condos, and townhouses. In case you log on early, you'll get a screen like this. Ignore the date. I will be on live at 9 o'clock. Here is the first graph. The purple line is the current data. It's showing offers accepted in the past 5 weeks. We've learned the number of offers accepted is really important because the number of inventory tends to come on much more consistently than the buyers. So when the buyers disappeared earlier this year, the market slowed down fairly rapidly and fairly dramatically. Notice basically for the month of July, we have been improving. We're still 1,000 units short of where we should be, but we're improved from about 1,550 short. So we've gained almost, well, we're still a little bit below. We've gained about 500. We've gained about a third of our shortage back already. Our target is the black line, which is the 10-year median. The other years are bad years. Just to give you an idea, this is the pandemic coming in. You can see how dramatic, but how short-lived that was. This is the 2007 mortgage meltdown, and then you had a second slowdown in August of that year, and then you had a slowdown in August of 2008 with the stock markdown. But the reason that's not on there is it's really insignificant. Then you have 2001, which is 9/11, and you can see the impact, which again was a little bit more severe. The blue horizontal lines are about the typical severity of a slowdown, and you can see that this year was right there with that same level. But the duration was shorter, and then it recovered rapidly, and then we had the nesting urge afterwards, and you rapidly improved. So anyway, we've had now about 6 weeks of improvement. It's still significantly below where it should be. To put it in perspective, at the beginning part of the year, we were only 500 units above where we would expect to be. So to be double that below is pretty significant. Here is it in raw numbers, and the big takeaway is you're just at 900 offers accepted in the last week. And you can see that as the lowest number. There are some numbers that are close, 975 and 991. I'm sorry the years aren't on here. We could count back. This is 2022, and every year, every column is 1 year. This now is looking at the breakdown of the different counties, and what you have is the top 4 Bay Area counties. There's 9 Bay Area counties. I'm only looking at the top 4 because that's about 75% of the activity, and it cuts my workload in more than half because I'm only doing 4 out of 9. Those really, Santa Clara and San Mateo lead, and Alameda County and Contra Costa are the only other 2 counties, and they don't really lead in any aspect, but they're large in size, and that's sort of how I picked the 4. And they're also 4 sort of on the southeast portion of the bay. What we're missing is the northwest portion of the bay. Marin, Napa, Solana, Sonoma, and I'm missing one. So what you have here is just a number of new listings, and then you have the breakdown of the different types. And when you start looking at 1 week, you can start seeing how much fluctuation there is. Santa Clara County went up 18% number of new listings. Alameda County was down 13%. A lot of fluctuation, which is one of the reasons I do 5-week data for most things. Total number of inventory available. Obviously, that's a much more stable because you're looking at the whole level of the reservoir instead of how much water came in or left. New listings is new water coming into the reservoir. Total active listings is the height of the reservoir, and new offers accepted is the water leaving the reservoir. So here you can see that inventory is going down, which is a good thing. It typically happens at this year. In Santa Clara County single-family homes, the peak inventory is typically right around the middle of July. I like saying July 19th, but there is obviously some fluctuations. Then what you're looking at here is the number of offers accepted in 1 week, and because it fluctuates so much, also in the past 5 weeks, which stabilizes it. So you can see overall you gained 3%. You lost 5% in Santa Clara County, but you gained 50% in San Mateo County, which is huge. But when you look at the magnitude of the numbers, it's not that much. You went from 53 to 80. So you gained 27 homes, and 27 homes was 50% of the previous week's 53. DUI obviously is more important. That's the supply-demand balance. You can see that because San Mateo County had such an increase in the number of offers accepted, it had a huge decrease in the DUI. But again, that's based only on 1 week. And the corresponding data for condos is over on the right-hand side, by the way. I like keeping them separate. There's not a blended product. A lot of areas, people that do data combine the two. I really do prefer keeping them separate. But here's the 5-week data where you start making some significance. And DUI, remember, is one of those things where you want it to be a lower number. You don't want it to be up and to the right. You want a lower number, faster paced marketplace if you're looking for, a seller's perspective and wanting to sell quickly. It's also when you tend to have appreciation. It also tends to be when you have more transactions. So in general, the industry likes a low DUI. Now, 15 that we were having earlier this year is ridiculously low. 30, 40, 50 days of DUI is fine. And we're at 45. So we're at the high end of that. And we're basically right at the low end of a balanced marketplace, still favoring the sellers, believe it or not, a little bit. It's not favoring the sellers as much as it's been for the last 2 years. And that's what we've gotten accustomed to. So it feels like a real slow marketplace. But you can see they're all negative about 4 days roughly overall. And again, you can see Alameda County is sort of big and it's only minus 2.3. The overall is minus 3.5, but everybody else is actually closer to 4, 3.7, 4.1, 3.9. So that's why it's important to look at the breakdown and try to figure out a little bit on what's happening in the different areas. And then you get down to closings, and with closings, you can look at the overbidding, and you can see that 50% of the sellers are still getting more than their asking price. In Santa Clara County, it's down to 43%. In Alameda County, it's 62. But, right around 50% of the sellers are getting more than their asking price. On average, the sellers are getting right around 100%. Well, on average, they're getting 103%. The median, the point of which 50% sellers are getting more, 50% are getting less, is right at 100%. And that's one of the reasons on that data point, I typically follow the average, as I always would have expected the median to be very close to 100% an awful lot of the time. And it's close, but it's really not at 100% very often, surprisingly not, even though about 10% of the market tends to sell there. And then you have the 10 percentile, the median sell price, and the 90 percentile, and the price appreciation over the entire calendar year of 2020. So, you can see that even 11% up to almost 25% or a little over 25% is very significant appreciation for a 2-year period of time. But you have to balance that with a little bit that we were at 50% not too long ago. And so we've lost all the appreciation that we've gotten in 2022. And I'll point out that the condos are significantly slower fluctuation from a high of 15 to a low of 1.6. Average appreciation for condos is only 1.6%. And yet the lowest number on any one of the components that make that up is 4.8%. You might wonder, how can that happen? Well, if all of a sudden the lower price counties, Alameda County and Contra Costa, sell more units compared to Santa Clara County and San Mateo County, that pulls down the median for the combined data, but doesn't pull down the median within any one county area. Now we're changing gears and going into what I call macro data, which is it's my old nomenclature, and it's Santa Mateo and Santa Clara County single family homes, condos in a blender. So maybe I should call it the blended data. And that's what I started doing when I try to measure what's happening with COVID. This is the chart that we've seen. I've added in the blue box here on the left and the red box to give you some idea when the marketplace is hot and cold. And how you judge that is by where the current week data, which is the purple data, leaves the 100% mark. So it's leaving right about here. So it's in the white area. So it's a balanced marketplace. Last week, it looks like it left right here. Well, in fact, it left here and it was just barely over 100% for a little bit. So, a lot of list prices are 950. These are the people that are doing 950 rounding up to the 1,000, basically offering ask price. So the fact that it's basically popping up in the blue would tend to indicate, based on this one data set, we just hit the cusp of a buyer's marketplace. But now keep in mind, we've improved this week, because on this chart, as you go up this way, you're getting to be a hotter marketplace. The dotted blue line is the worst week we've ever had, and the red dotted line is the hottest week we've ever had. So we're you're closer to the blue line, but the closer you get to that dotted blue line, the slower the data is going to move. And you can see, I would say this week and last week are basically on top of one another. There isn't any statistically significant difference between the 2 weeks. If we jump back up this direction next week, then you've been improving. If you continue down, it was just a little respite, a little plateau, just what data set happened to close and go get reported to the MLS. Same data set, just easier to read. The dotted lines are the best performing. They're the oldest lines. Then you have the dashed lines and then the solid lines. And it's almost grouped. You got the 4 dotted lines up here and the 4 dashed lines and the 4 solid lines. So that shows you that the market's just been cooling. And I think if you look at each line, for the most part, they're right in there. But then, the gray and the orange are actually right on top of each other, just like the burnt orange and the purple are right on top of one another. From one week to another week, there isn't necessarily a change, but the trend is pretty clear. This is pretty interesting in my opinion. It's the blue line is total available inventory. You can see we peaked at just over 120% of the expected inventory. We're now rapidly coming down to 100%. If we were on the yellow line at 100%, you would have 100% of the 5-year median. In this case, the 5 years are 2015 through 2019. So we're basically very close to the amount of inventory you'd expect. The thing that's related to total inventory is the gray line, which is the number of new listings coming on the marketplace. And that had been one of the most consistent lines that we've had, performing almost neutral, slightly above. So slightly more sellers were coming on the marketplace than would be anticipated, but not dramatically. And you can pick whatever number you want, but it's somewhere in the 5-10 percentile range up here. Then here there was a lot of perturbations because of holidays coming in different times. July 4th was basically the latest it could be. It was on a Monday instead of a Sunday back, so that impacted a different week. And Easter was, I think, early. Easter was at one extreme or the other of its range, and so that this is your Easter and this is your July 4th bump. But generally, you were doing pretty well. Then you were basically right at 100%, and now you're below. What I think was happening here, the market was good, so sellers were encouraged to come on the marketplace. A few more sellers were moving, for whatever reason when the market was hot. Then the market cooled, so that some of the spur of the moment sellers just decided to wait. And now what's happening, the reason I think we're seeing the drop now is simply a fair number of listing agents have a system in place where it takes them a month to get a listing ready. The market's been slow enough now that those listings, those seller contacts, their pipeline isn't staying full. Once you get into the pipeline, you're basically committed and you go through with it even if the market changes. So now we have fewer new listings coming on the marketplace, which is why the inventory is growing. The other thing that's interesting is the number of buyers is coming back. That's the red line here, the burnt red line. We're rapidly approaching 100% of the offers you'd expect. So we went from 120%, which was fantastic if you want volume in the industry, down to 80%, which was pretty traumatic. And it basically happened overnight right here. You can see how dramatic that change was. It took a while for people to get too accustomed to it. But now for the last 4 weeks, 1 week ago, 2 weeks ago, 3 weeks, so the last 3 weeks, it's been improving. That's a very good thing if you're looking for balance. Here's days of unsold inventory, the key indicator. I think last week I talked about it was sort of at a plateau, and it would be interesting to see what happened this week. If we went down, the market would be improving. If it went up, we would be at a plateau. Well, it went down. We're almost at the normal level of inventory. This is raw count. So in this case, the yellow line is exactly where you'd expect inventory to be. So you'd expect it to be just under 40%. Maybe I can call that 39. It might be 39.5. And you're probably up here at about something like 41.5. So you're only 2 days apart of where you'd expect it to be based on 15 through 19, which are 5 good years. So that actually bodes pretty well. We had a huge correction in the marketplace, but it almost looks like that correction is over with, and we're going to return to a fairly robust marketplace similar to 2015 through 2019. Here's your inventory in the blue line. This is the number of new listings that have come on the marketplace, and you can see it's starting to come down. It's a little jittery on its way down, and then you're looking at 5 weeks of data here. So I'm not sure why that's so jittery. I'll look into that, see if I can figure out why. Because when you're taking 5 weeks of data, you'd expect it to be a lot smoother. Look at the number of offers accepted, very smooth, very dramatic drop, but you can again see the turnaround and we're increasing. This is DUI for the combined things, my blended data. You can see we're just below 50, 49 point something. You're still in a balanced marketplace, which this valley tends to spend very little time, basically between 40 and 80, which is off the top of the chart, is what I consider to be a balanced marketplace. So even though the market is dramatic, there's been a lot of loss in price pressure. We've lost basically all the appreciation of 2022. It's in a market that I would normally call balanced. This is median days on market and down here in the yellow and average days on market in the blue. I throw it in just for completeness. You can see it's increasing. This is a lagging indicator. So even though DUI has been improving, days on market is going to continue to go up for the foreseeable future. I put this in just because a lot of people quote. I don't think you can tell anything based on this information, but it's there. So if someone can tell me what the real value is of that data point, I'd appreciate it, but I don't see it. It's basically simple. It's where you don't have to do any math. It's something that the MLS reports, but I think it's a meaningless data point. Here is your sold price. You can see that the 10 percentile peaked and it's rolled down a little bit. The median price peaked, basically somewhere around May, middle of May. So that would tend to say that the peak offers were accepted right around Easter, middle of April. And then we've come down and you can start seeing that your burnt orange line is just about where we were for the peak, not for the peak, but for the bulk of 2021. So that's what I would be doing right now. I'd be looking at a CMA from 2021. I'd be doing my homework on pricing in 2021 and saying that's where the price is for the typical property. And here is your 90 percentile at the top. You can see it's rolled over. It has a lot more fluctuation because when you're talking about the top end of the marketplace, you get a couple expensive units and it does impact the data point, and that's why there's more fluctuation. With that, I finished my broad overview. I'll see if anyone's got any questions, and if no one's got any questions, I'll go forward. The handout is posted. You just type in the root URL, you add in the word H for handout, 2022, the year, the month, 08, and the date 13. I got it up about 8 minutes before the hour. To join me live Saturday morning, you just add in 2022 to the green URL. To get to my YouTube channel, it's just the green URL, and to any specific episode, you add in the 8-digit year, month, date code. Anybody unmuting themselves? Nope. Now what we're looking at is the number of new listings. So the yellow line is the 5-year median, 15 through 19, where you'd expect the number of new listings to be. You can see this week we're down. The last couple of weeks we've been down. So we have 400 new listings. You'd expect 500. We've had a shortage of 100 new listings. That's what's bringing down the overall inventory a little bit now, is the decrease in the number of new listings coming on the marketplace. This is total inventory. You can see total inventory is now approaching the yellow line. The yellow line against the 5-year median. So we're right about the level of inventory you'd expect after we sort of had a bump up. And even the increase wasn't that much. You basically hit 2,500 units when at the time you'd expect to be somewhere around 2,150. So you only had about 10-15% more inventory than you'd expect. And it was way more. We had a shortage of inventory, and now we had a slight surplus, and we're rapidly going back to normal. Here's the number of new offers. You can see the blue line, the number of new offers was above the yellow line. You can see that it crossed over, and it's been below ever since. It's coming back up, so that's the encouraging news. You can see how little difference there is. You'd expect 400, and what are we at? 380, right about where you'd expect. This is days of unsold inventory plotted out. Single family homes only. This to me is the single biggest indicator. From 42.5 to 77.5 is white in color, and you can see most of the areas are in that range. The exceptions are Cupertino Sunnyvale at 27 days, Redwood City at 38, 39 days. And then on the slow side is Menlo Park, Atherton, Portola Valley at 98 days. But the bulk of the marketplace is in what I would consider to be a balanced marketplace. And we don't spend a lot of time there, but that's where we're at right at the moment. Here's DUI over time. It's your single family homes only on the top, condos and townhouses on the bottom, Santa Clara County on the top, and San Mateo County on the bottom of the top. And what we're doing here is just looking at DUI, just grabbing the color code. So back here at the beginning of May, you can see that the color was much redder. You can see that it got paler and then got white and got some blue in there. And, there really isn't much change. And, it's different micro market areas. Like this one is paler, that one's paler, that one's gone white, this one's coming back blue, red, this one's coming back red. So there's fluctuation, but I think the trend is going to be for improving based on the last couple days. Last couple days, basically the last week. Here's your DUI. You can see that my blue line's there showing the rate of 5 days per week, which is sort of where I set off the alarm bells. We weren't quite at 5 days per week because the line got closer. But look, we've rolled over. The only area that hasn't clearly rolled over is San Mateo County, and it's clearly at a plateau. But the red line, Santa Clara County single family homes, is down. The yellow line, Santa Clara County condos, is down. And San Mateo, the brown gray line, is basically flat. And the numbers are fairly respective. I mean, this is 40, that's 60. If I was to guess, Santa Clara County's maybe right about 45. San Mateo County's probably about 50. So it's not a bad market. Here's your DUI over time. You'd expect it to be at the yellow. It's actually right now up at the blue, so just a little bit. Putting numbers on it, maybe expect 39, and you're somewhere maybe around 41 and a half. Here's the magnitude of overbidding. This is how much buyers are willing to overbid, and that's next in order because it's going to be the next most sensitive thing. This is the buyers sensing the pressure. And the only reason this isn't as good of an indicator is days of unsold inventory is because we have to wait about 5 weeks for the sale price to get reported to know what the amount of the overbidding is. If we would go back to the old way that we used to do business prior to about 1991 of reporting the pending sold price, then that data would become a whole lot more meaningful because you would know what was happening last week instead of essentially 5 weeks plus a week ago. But it is what it is. You can see you have some areas up here in the North San Mateo County that are still at 106.5% of the seller's asking price, which is pretty respectable. Most of the areas are between 99 and 101%, which is why there's no color. Cupertino's coming in with a faint pink. It's almost hard to pick it up, but that's about 103%. Saratoga Las Gatas, you can see the faint blue down here. San Mateo Coast is hard to see the blue because of the green from the mountain. And I would have thought that I would have thought Palo Alto and Atherton would have been also below 100%, but they're slightly over right now. They're just a half percentage point above. This is the speed at which the market changed. You go back here to April 1st, and sellers in Santa Clara County were getting about 118.5% of their asking price. Here we are just a few weeks later, and we're down at basically 100%. And with the steepness of that line, it looks like it's going to just blow right through there. I'm not so sure that it may not just do a fairly abrupt turn and level off. 100% is sort of a pretty major benchmark. The DUI is improving, but it's really hard to tell based on the current steepness. I would be hard pressed to say that it's going to turn. When you look at it, the DUI turns on a dime, no question about it. Overbidding tends to be curved, if nothing else, because of the different length of escrows. Some of the escrows that got accepted last week are going to close next week and have very short escrows. Others are going to drag out for 6 or 7 or 8 weeks. It's going to be a more gentle. I would have to say that these numbers are going to continue to come down. Here's the magnitude of Santa Clara County, San Mateo County, condos and townhouses as single family homes all together. You can see last year sellers were getting 108%. This year they're down here at basically 100%. It's 100 and a fraction. Basically what I call a balanced marketplace from that perspective. This is the frequency of overbidding. Now the difference is the last one is how much is a buyer willing to overbid, and this is how frequently is that overbidding occurring. And again, you can see San Mateo County North and Cupertino Sunnyvale are the two hot spots. A lot of them are of the areas are in the 33 to 50, which is a balanced marketplace. A couple like the coast, San Mateo County coast and Saratoga Las Gatos are about ready to turn from 33 to blue. For those that have been following me for a longer time before I try to simplify some of my stuff, you will know that Saratoga and Saratoga Las Gatos, as well as the San Mateo coast, are actually two micro markets along with South County that were sort of treated a little bit different because they tended to be a slower marketplace. So it's not surprising that those are the first ones to have their prices cooling. This is the overbidding frequency over time. And again, you can see how dramatically, it rolled over and then it just did a free fall. And those numbers don't look like they're going to change anytime soon. This is the frequency of overbidding. You can see that you get some fair amount of fluctuation from week to week. We did have some improvement this week, which means we had improvement 5 weeks ago, which is just about the time when the DUI started to level off. Here is your price map. This has nothing to do with the heat of the marketplace, but instead is simply the price. The color is assigned based on the middle number, which is the median for the geographical area. The number to the left, using Campbell, Cambrian, Willow Glen, and Santa Clara as an example, is 1.2 million. That's the lowest 10 percentile. So that means there's only going to be 10% of the homes in that micro market area that sell below $1.2 million. The bulk of them sell about 1.6, the median, and 10% sell for 2.5% or more. Here is the median sold price over time for the different counties. Santa Clara County in red, San Mateo County in brown, and condos and townhouses in the yellow. So again, if you look at Santa Clara County, you can start seeing we have some leveling off, it looks like, here for just a couple weeks. And that comes back right to the level we were in 2021. Actually, I have to come back to 2021. So basically anything from, if you really want to go back, you could probably come all the way back to just about April 1st. You got some overshoot here, then you're creeping up a little bit at the end of the year. But in general, and even into this year, but remember, this is lagging by close of escrow. So this being right around the middle of February, I would guess. Yeah, right around the middle of February, that would take you back to just about the first of the year. So if you looked at offers accepted pretty much any time in the calendar year of 2021, that's a pretty good approximation to where we are now. And this huge bubble that we had this past year has basically been erased. Here's showing the appreciation over time, just in numbers. So here's the peak appreciation for each area on the right-hand side, highlighted in yellow. And a lot of the areas were in the month of May and they're going to be disappearing. So you can see this is where, the 57.7 for Las Gatos Saratoga was on May 28th, and that was their peak. So it's also duplicated there. But now you come out and you're seeing you're at 25%. So you can see how dramatically, well, actually you have to come all the way out to the bold at 19%. So now you can see how dramatically different the left column is that's bold versus the right column that's highlighted in yellow. And that's based on the appreciation from the entire calendar year of 2020. And the number here is the date and when that median escrow typically closed. Here's the breakdown if you wanted to see what was happening in any given areas. I'm picking on the moderate priced areas today. So Campbell, Willow Glen, Santa Clara, Campbell, you have 40.6 days of unsold inventory. Sellers are getting 100.3% of their asking price. And my screen is right in the way. They're getting 37.7% of the sellers are getting more than their asking price. The median price is 1,650,000. The 90 percentile that I already talked about is 1.2, and the 10 percentile is 1.2. The 90 percentile is 2.6. And you can go down. Single families are at the top, San Mateo County, and then condos in both counties. Here's a quick recap of the major numbers. Active listings in Santa Clara County is now under 95%. So it was just above 95% last week. So last week it was colored black for a neutral market. Being below 95, I had to change the color back to red. Most areas are cool marketplace with more than 115% of the inventory they'd expect. We sort of ignore the Bay cities when we've talked about that before. DUI is basically fairly balanced for most areas, just above 40, but none of them are at 60 anymore. Magnitude of overbidding, very close to 100%. You know, some of the higher areas is San Mateo County single family homes right at 103%. Frequency of overbidding right around 45 to 55%. And then here you can sort of see on the appreciation, you're in Santa Clara County, you're now at 22.6%. Last year's peak was 24.8, so that was the peak, not the typical. We peaked out this year at 43.6%. So the reason, even though 22.6% is a fantastic rate of appreciation for 2 years, I went ahead and made it a buyer's market, a nice cold marketplace, because we've lost 20% this last year. To lose 20% in just a matter of months is clearly a cool marketplace. San Mateo County has lost 26%. You come down to condos and you've lost somewhere around 18%. And the base cities is pretty amazing. They actually saw 17% appreciation earlier this year, which was a cool marketplace from the 15.7 they had last year in 2021. But now they're 11.8% lower than they were in 2020. So they're back into the 1999 pricing, most likely. Now we're looking at Santa Clara County single family homes only. This is days of unsold inventory compared to the median. So you can see that it went skyrocketing up and then it turned, and well, this is just DUI, and then it came skyrocketing down. The blue line is the worst month that we've had in my 5 years, which is 15 through 19. The brown line, black line is the median, so that's where you'd expect it to be, and the red is the hottest we've ever had. So we've gone from being cooler than any of the 5 past years to being between the median and the slowest. Here's the delta where I subtracted. So when you hit the 100% and are on the horizontal axis here, that's when you're having a completely normal year. You can see we're slightly above, so we're somewhere about a day and a half above where you'd expect the DUI to be, and dropping vertically down is just a way of making sure I'm honest and report all the data. Here's the 7-day average DUI delta. So this is saying that we're actually 10 days, which seems pretty dramatic compared to the last graph. Here is looking back forward in time a little bit, because I'm normally comparing this to August data. It isn't available until September the 5th. We're only at August the 8th, but you can start getting some idea. Inventory at 1158, more inventory than the last couple years, but 2019 had more inventory, basically the same as 2018. So inventory is basically normal. If you come down to median days on market 20, it's actually one of the highest days, and is actually the highest all the way back to 2012 when you had 31 days. DUI, much better indicator, in my opinion, 45.3. You only have to go back to 2019 to have a higher DUI. Very similar to what it was in 2018, similar to what it was in 16. So all of a sudden we've gone from a market of what, oh my God, what happened, to almost a market that's behaving normally. Sales are still going to be on the low side, 25.5. But again, you only have to go back to 2019 when you had 25.6, 18, 26.9. We're not in these 33.7, 35.1 of the last couple years, or even 17 all the way back. And going back further in time, we had even less more sales. That's something that's noteworthy. The number of sales has been cooling off over time. If you come down to overbidding, 100%. That's one of the coolest that we've seen. You have to get all the way back to 2011 and 10, coming out of the 2007-8 recession, which sort of bottomed out in 2010. Frequency of overbidding, 40%. Again, one of the lowest numbers. And again, you have to come all the way back to about 2011 when we were coming out of that slowdown. Price, 1680. Last year was 1625. So pricing it using 2021 pricing and ignoring 2022 pricing is probably not a bad strategy. Number of closings is 700, and you can see that is the lowest we've ever had. So, that's looking in the rearview mirror, because you're looking back for 5 weeks and then you're looking back for closings over that. So it's clear we went through a fairly rough period of time, but it looks fairly promising at the moment. Here's comparing apples and apples, because I'm comparing August 5th to August 5th, but you're going back in time, so I won't go over that. And with that, I'm ready for any questions. Not hearing anybody or seeing anyone unmute themselves. Have a great week. See you next week. Take care, everybody. Bye.